Hello, my name is Florian Neagu, and I'm the head of Financial Stability Department within the National Bank of Romania. In the minutes to come, I would like to share with you some of our work and interests delivered by this huge change in the digitalization of finance. And we have acknowledged that technical innovation is already changing the banking and financial system, mainly in three ways. The first one, there are new players in the game, and there are big techs, fintechs, third-party service providers. What my colleagues from the oversight department implemented more than 5 years ago in order to grasp these new players is to build up a fintech innovation hub. And currently we have tens and tens entities that join this hub, and it's quite very nice to put them together and top-upping their ideas in order to improve our markets. The second channel I've mentioned is about new products and services on the financial and banking market. This is good for the competition. But we also monitor, because we learn from the past crisis worldwide that above a certain threshold of competition, this might turn into financial instability. Therefore, up to now, there is a good complementarity between these new players, these new channels of delivering services compared with the traditional one. And we think that, and we hope that this pace will continue. And the third element that we'll like to focus more, it's about risk. How new risk emerge and how to deal with this new phenomenon. And I'd like to share with you 3 types of projects we currently have the Financial Stability Department. The first one, it's about the cyber risk. You know, in this swift pace of digitalization, the likelihood and the impact of cyber incidents on the financial markets have dramatically increased. And so far in the Romanian banking sector, we encounter a relatively small number of cyber incidents, and the bulk of them had not generated a major problem. However, looking at the sophistication of the cyber incidents, the concentration of the third-party service providers, and this geopolitical tension we have in Europe, in Asia, and elsewhere, we think that this type of risk should be closely monitored. Therefore, what we developed in this year was a macroprudential cyber stress test that has 2 parts. The first one is a classical one with a micro perspective. We ask each and every bank in the system how they would perform if such scenario would manifest. And we look at the response team, we look at the communication channel. It's so important, this part of the communication, when you have a cyber incident. We look how the backup system, backup data would be up and running in such moments. But the nice feature of this macroprudential cyber stress test is the next part, the macro stuff. We look at and add all these idiosyncratic risks, but you know what we learn from past experiences, that they do not necessarily top up. There are other synergies, negative synergies, and second round effects that would manifest. And in the end, we ask ourselves if classical methods to deal with such negative events still work, or we should think of more innovative solution to be implemented, also in terms of liquidity. The second project I would like to share with you, it's about central bank digital currency, and we focus more on non-euro area countries where the financial markets are thinner than in euro area, and our interest is, as I said, in Central East European countries, looking mainly at two things: how the trend of potential adoption of this CBDC is developing, the interest by firms, companies, and so on. And the second, what would be the proper threshold for the retail CBDC in order to not to impair the financial stability in case of a crisis and in case of a bank run. And the third and the last project I would like to share, it's more research related. It's about ethical aspects of AI and machine learning, and we know that these new instruments might deliver biases or less fairness and so on. Therefore, we try to investigate this topic as well. And one recent example, we try to look at the machine learning models that might be used for lending activity to see if there is any bias in the result. And we were able to put together large individual databases that would give us a quite good comfort that we do not ourselves generate biases in data we use. And some preliminary results of this project are quite promising, saying that if we use proper models of machine learning, we feed it with proper database, the results do not lead to biases or lack of fairness in lending decisions. This journey that started due to this digital innovation, transformation of the banking and financial system, also has brought big new opportunities to improve our markets, to improve access to finance, but also challenges and risk to manage. And I think that the macroprudential team from the National Bank of Romania is quite happy to join this journey.